Hi everybody, this weekend analysis will be for the upcoming week of the 3rd of November 2025. Now let's start off with looking at the S&P 500 on your screen. What you notice about the S&P 500 is that you are seeing it starting to pull back, right? Which is a good sign for the overall market. The reason is because as we covered many weeks ago, right, the S&P 500 has been very steadily above the 50 moving average, but then again, it is very overbought on a longer term time frame. So I think a pullback would be really nice for the markets in order for the markets to go higher over the next couple of weeks. Now we also note that there are also many individual names that are starting to run, which are really good as well, and we will cover them later on in the weekend analysis. So this week, the key thing to take note is that we have the FOMC decision coming up on Wednesday, right? So essentially it's the Federal Reserve meeting, and I think it's very key as well because the Federal Reserve, obviously they not only will adjust for interest rates, but they will also forecast, right, what is the potential run in terms of the runway for interest rates going forward. So very clearly you have been seeing news, headline news all across newspapers that interest rates are coming down. That's what we are seeing, and that's what we have already been seeing, right, over the past couple of months. So that shouldn't be much of a surprise. But in fact, what we are seeing here is that potentially interest rates is on the downtrend. That's on the whole, but it could potentially spike up a little bit, right? The reason is because on the weekly chart you can see the interest rates are oversold, right? And that typically tends to actually lead to a run to the upside. So let's see what happens here, right? Let's see what happens after the FOMC meeting. If it's positive, markets can continue to rally to the upside. But then again, I think that we need to be a little bit cautious here, bearing in mind that markets are really overbought at this current period. Yeah, so we wouldn't dwell on the overall markets too much, but let's just look at some of the individual names and target them on a whole. Now, first one I have for you here is Cloudflare, and this one I've been really bullish all along this year. I think it's one of the stocks that have done really well for us on the whole, right? You can see that on the longer term time frame, right, we are above the all-time highs. That's a really good news here, and you can see that we are above this key level here of 225. Now we're at 253. We finally broke this level of 225 after a long period of decline, right? So that's really good news here for Cloudflare. If you look at the earnings report, it was really good. I think they are doing a very good job. Earnings was 17% above the expectation, right? They reported 0.23 in terms of the earnings versus 0.27, sorry, versus 0.23, which was what was actually estimated. We also saw a very good increase in revenue as well. So that's very nice, right? I think Cloudflare is one of the names that you can really look at, holding over the next couple of years. I think they are doing really well on the whole. So this is one of my most favorite setups, right? I call this the bullish move up, what we call the earnings gap, right? The earnings gap is what we usually see when we see a very good earnings move. It opens lower and close much higher as well. So nice 30% move here on Friday. So Cloudflare very highly positive. Now a name that it's also starting to run here is Marvell. Right, Marvell I covered last week. I say it's one of the best setups that you can look at last week. The reason is because we saw this bounce off the 50-day moving average having already broken out of the longer term consolidation and corrective period. So I think Marvell continue to look really good here, starting to run to the upside, right? I think it's one that really you can really continue to look at going to next week as well. Datadog, right? Very nice. I think like what I talked about last week, a series of high lows. The chart hasn't changed at all. I think very clearly, once it breaks this level 167, it can go a lot much higher, right? I think on the whole, if you look at the stochastic index, it's really looking like it's really highly positive, right? Like this uptick in volume as well. So I think Datadog continue to remain very nice. Now you notice that a lot of names I covered last week I'm covering again. Reason is because we are still seeing them move higher this week. So MDB is very nice. I think if you look at the chart here, you can see that this was kind of like a consolidation period, sideways kind of move, right? With the range being 300 and 345. Finally we have broken out of the range. So MDB looks very nice. On the whole, you can see that we have broken out of a longer term descending trend line. So I think this is very positive. Zscaler, right? On the theme of cybersecurity, you have CrowdStrike already moving very well. You have Net, which is Cloudflare, moving on Friday, and obviously you cannot forget about Zscaler. So yeah, I think this one is still continue to remain positive. My chart for last week remains intact. Sideways consolidation before a move higher as well. Salesforce continue to look positive, right? A pullback towards the 50 moving average on Wednesday, and a rebound off it, and now moving higher as well. So Salesforce, it looks really really good. Right, it still looks very nice here. Snowflake, no one covered this. CrowdStrike still doing well. AMD won't cover this. Okay, this theme really popped out this week, and that is Cardinal Health, right? It's a medical device company, right? Let me just look at the weekly chart, and why I like this a lot here is you are seeing a generational company, right? That's the first thing. Right, what is a generational company? It's a company that goes up a lot over the period of 5 to 10 year period, right? And this has done a lot, very well, right? From about 45, now it's at 190 over three year period. So why this is nice is because you have a very very strong earnings gap, and typically we don't really see this earnings gap very very often, right? You'll notice that over the past couple of months, it has been trending really really well. And finally, after the consolidation sideways over the past 3 months, it has really started to very, very strongly here. So very nice move here on earnings here. Why this is very important here? Because it's a huge gap to the upside, and earnings was way above expectation, 16%. So I think that's very, very nice here. Cardinal Health is one that we're going to put in the portfolio, not buy it, but we're just going to monitor it, right? And over the next couple of months, I think this one could really go a lot higher from here. Okay, so that's all for this week's week analysis. Keep it short and simple. I think essentially the names that we covered last week are still running this week, so that's really good. Apart from that, then we continue to monitor some other names as well. So markets next week, FOMC, I think that's the key thing to take note. Apart from that, nothing really much. Lots of earnings as well. So yeah, please take care and stay safe and have a good week ahead. Thank you very much.